Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has been stuck in a sideways pattern, with bulls having a slight edge. The support for gold came from weak U.S. jobs data and concerns over geopolitical tensions. However, the pause in gold purchases by the PBoc for the second straight month, along with bets on Trump potentially winning the U.S. presidency again, have kept any significant upward movement in gold prices. All eyes are now on tomorrow's release of June US CPI data, as any big surprises could set off a new trend in the gold market. Looking at how gold performed recently on the gold against US dollar daily chart, it's clear there was some upward momentum last week. Bulls managed to push prices past important levels at $23.30 and $23.60, closing at $23.91 on Friday, with a solid gain of 2.8% for the week. However, just when $2,400 seemed within reach, strong selling on Monday wiped out much of Friday's gains, bringing prices back down to around $23.60. Coming to this week, bulls are regrouping. So if they can gather strength again, we might see another attempt to break through the $2,400 mark, potentially opening the door to test the upper range limit around $2,430 since mid of April. While on the flip side, support around $23.30 could help cushion any downside if bears regain control. Despite Monday's setback from bearish pressure, the overall trend for prices seems upward. Here, I reckon two main reasons stand out. Firstly, last Friday's U.S. non-farm payrolls report showed signs of cooling, with 206,000 new jobs added, beating expectations, but with significant downward revisions for the previous 2 months. Coupled with an unexpected uptick in unemployment to 4.1%, its highest since November 2021, the 2-year U.S. Treasury yield dropped by 8 basis points to its lowest since April, and the U.S. dollar also briefly dipped below the 105 mark. As inflation, growth, and labor data of the U.S. continue to soften, the case for a Fed rate cut in September appears increasingly likely. And currently, markets are pricing in a more than 75% chance of a rate cut in September, which is a strong bullish signal for gold as a zero-yield asset. And secondly, there is market demand for safe haven assets amid the recent UK elections, France's hung parliament, and the potential change in presidential candidates of the US Democrats. Against the backdrop of ongoing conflicts in the Middle East and between Russia and Ukraine, gold's appeal as a safe haven asset is somehow undeniable. However, I also see some risks that could limit gold's performance. Still talking about the recent U.S. elections, besides what's happening with the Democrats, gold traders are increasingly eyeing on the growing chance of Trump making a comeback. He's renowned for his fiscal policies involving like tax cuts and deficit financing, which could ramp up inflation in the U.S. and drive treasury yields higher. Well, even though the November elections are still a ways off, the market's expectation about these factors are likely to put a damper on gold's performance. And on top of that, the PBoc putting a hold on buying gold for the second month in a row has left gold prices without a key support. But personally, I think the US starting an easing cycle and the global trend towards de-dollarization will still be key themes in gold trading for the latter half of the year, helping to keep gold prices strong in the medium to the long term. So overall, gold is still in a holding pattern with the bulls gaining strength, economic data cooling off in US, and geopolitical risk hedging support gold performance. However, the PBoc's halt on purchases and expectations of a hawkish Trump administration could suppress upward movement in gold. The release of June's US CPI data tomorrow is crucial for gold's next moves. Forecasts say core inflation month on month is expected to go up by 0.2% and year on year by 3.4%, showing a continuing cooling from May. I think if the core CPI grows more than 0.4% on a monthly basis, traders might just doubt that a rate cut in September is still possible, which would be bad news for gold. Conversely, a figure below 0.2% could really nail down the expectations of a September cut, and that could really lift gold up. So that's pretty much for this week. If you have any thoughts on the US CPI data tomorrow or recent gold trading, feel free to leave a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!